Jack is back. I think Ant IPO might go ahead. Alibaba is also back to the Chinese New Year Gala, which is, some of you might know, the Chinese equivalent of the Super Bowl. So what could be we anticipating? Would that be a brief spring for the Chinese private entrepreneurs? So one key question I would actually put to this wonderful panel, as I put to my own econ team at CCA, is that without the fundamental change of the ideological and the political directions in China, and with the heightened US-China competition and the geopolitical situation, what are the economic indicators we should be looking for without being dogmatic about the change that couldn't happen? So next panel, moderated by G.A. Donovan, our fellow of Chinese Society and Political Economy, will help us shed some light on this. Over to you, Jay.
Thank you very much and welcome. Yeah, thank you very much and welcome. As Susan so kindly pointed out, the question at the end of the last panel really was a great introduction to our topic. It's been a very rough few years for the Chinese economy. After an almost 40-year run of nearly 10% GDP growth on average every year, GDP growth in China started to slow around 2015 to around 6-7%. And then in 2020, of course, the year of COVID, slid way back to 2%. It's since recovered a bit, a big bump the following year, and then around 3% in 2022, 5% in 2023. But now, of course, the good news in China came yesterday, and I understand from my contacts in Shanghai and the markets in Hong Kong, people are very, very happy and excited to hear the new raft of stimulus measures that were just announced. But like happened in September when some stimulus measures were announced, the initial ebullience soon cooled. So we'll have to wait and see what happens. We're going to talk about that in a few minutes. But what I'd like to get started is to ask Lizzie about China's industrial policy. Now, industrial policy in China comes in for a lot of criticism. Domestically, people point to the fact that it diverts resources to these favored industries, new technologies, new energy, away from more traditional sort of bread and butter manufacturers and small businesses. And of course, overseas, people point to these policies as a source of unfair subsidies that are prejudiced against foreign manufacturers. So Lizzie, can you tell us a bit about where you see China's industrial policy and where you see it going in 2025?
Right. Well, thank you, GA, and thank you for this audience. So in short, I think China's industrial policy is going to have more teeth in 2025. It's about to get leaner. It's about to get meaner. We used to think of China's industrial policy as a set of like bloated, wasteful, and inefficient policies. You know, this throw money at everything and hopefully something will stick approach. That's not the case anymore. And I think we're going to see a clearer trend toward a leaner and meaner direction. So specifically, I think we're going to see three emerging trends. Domestically, I think we're going to see serious consolidation in oversupplied sectors, including batteries, EVs, and solar. What that means is China is going to create a smaller set of firms that are more competitive and more profitable internationally. So that's my first prediction. Second prediction, I think we're going to see more coordination from the top. We're going to see SOEs and party leading working groups acting as grand orchestrators, channeling resources, channeling R&Ds, channeling capitals into sectors that matter most to Beijing. So we're going to see more coordination at the top, led by SOEs. That's something we have never seen before, but before Third Plenum, to be specific. And third, I think most importantly, is we're going to see this whole system, including investment policy, capital market, education system, regional and local policies, and incentives for the bureaucratic system completely rewired to back up China's industrial policy goals. So Beijing is really doubling down there. I think the real question is whether this new, more coordinated approach is going to deliver real results. And I think here, the picture is still very much mixed. We can talk more about the specifics.
Thank you very much, Lizzie. Now, Chen Qiheng, in your piece for the China 2025 report, you wrote about new quality productive forces, which you say will be a big part of the next five-year plan. And this is a kind of typical feature of recent Chinese industrial policy. So can you tell me a little bit about why the emphasis on new quality productive forces is different from what came before? And what risks do you see coming from it?
Sure. So this concept was proposed about a year ago by Xi Jinping on his inspection tour. And it is rooted in the Marxist idea that you have productive forces and relations between these forces, and that forms the economic basis in which will influence upward on the superstructure. It strikes a similar chord as some of the concepts we have heard before, like high-quality development, innovation-like growth. But what is significant about this concept is that it is rooted in the Marxist concept, and it's not just about one specific industry, and it's create this theoretical framework that in which local officials can expand and elaborate what that means to their localities or to their industries. And this space, this concept created, I think, will be very meaningful and will be interesting to watch in the upcoming year. And this concept, I think, will be a key basis of China's five-year plan from 2026 to 2030.
Yeah, thank you, Chen. And what about, like, say, for example, semiconductors? How has these industrial policies and the new quality productive forces helped China to tackle some of the problems around the international pressure on its semiconductor industry and to help it develop its own indigenous capacity?
Right. So it's about this ideas that thinking through creating productive forces, and you can create the clusters of different suppliers on the supply chain, upstream and downstream, and the linkages between them. It's more about this ecosystem approach to innovation rather than rather than supporting one single firm or supporting one single step along the supply chain.
Yeah, thank you. Lizzie, do you have a view on the Chinese semiconductor industry?
Right. So as I mentioned, I think, if we're talking about how much progress China has made, the picture is still very much mixed. One bright spot, memory chips. We're thinking about, YMTC making progress in NAND, in basic DRAMs. Companies like Nora, Beifang Huachang, are making solid progress in terms of domestic tool making, right? And Huawei's SOT design is certainly showing real results. And, advanced packaging, that's certainly a bright spot in terms of delivering results. But there are certainly challenges, right? So when we're talking about SMIC, still struggling with low yields, and especially at the 5 to 6 nanometer spectrum. China's, the U.S. sanctions chokehold on advanced EUV, that's a huge problem for China. And China is still struggling to build a strong software ecosystem like NVIDIA's system for its domestic AI firms and GPU development. So that's also, another hurdle for China. But I think the trend is quite clear. I think China is going to make steady improvements in terms of domestic manufacturing, reducing reliance on foreign tech, and there will be more national data centers popping up to support China's smaller tech firms. And, related to Jing's question, I think Alibaba is actually going to play a role here. But we can talk about that later. And China is still, still lagging behind the United States in terms of cutting edge. But China has dominance in terms of supply chain integration. China has dominance in certain chokeholds along the critical mineral line. And I think, basically we have this mixed picture, and how that picture is going to evolve is going to define the contour of U.S.-China competition for the years to come.
Yeah, Michael, you were a Treasury official in Beijing, and you've heard about the stimulus, new fiscal and monetary stimulus that was announced yesterday. I wonder if you could give us your take. Was this a kind of preemptive action in anticipation of what the new Trump administration might do?
I think that the so-called policy pivot in late September, in retrospect, and I was in Beijing that week, I do think was a preemptive measure. I think what the Chinese authorities were seeking to do was sort of avoid a double confidence shock. The domestic economy is very weak. China's leadership, somewhat surprising to me, was actually very worried about the signal that the capital markets were setting to the rest of the economy. Not just low prices, but just basically a dead stock market. And so I think that domestic weakness and then the prospect of Trump winning the U.S. election, I think, would have potentially been running the risk of a spiral of confidence. And so I think in retrospect, it was something of a shrewd move to get ahead of that. In terms of what we've seen this week, and we still haven't seen, we've seen the Politburo statement, we haven't seen the Central Economic Work Conference that will come later this week. I think it is going to send a message of further support for the economy, but I think we're still in something of a holding pattern until the March National People's Congress, because I think Beijing will use the time in between to really assess the risks coming from Trump across a variety of policy fronts. So the signals are important, but at the same time, I think we should take general statements of economic support with something of a grain of salt, because it is an effort to reinforce domestic confidence, but we'll have to see really what comes in March.
Yeah, thanks, Michael. And how much has Beijing been concerned about the U.S. export controls, and how have they adapted in response to them?
I think Beijing has been very concerned. I think we've reached something of a tipping point perhaps over the last week in terms of Beijing's response. We've seen the announcement of the export ban on germanium and gallium to the U.S., also China somewhat exercising an extraterritorial approach to that. And then we've seen the announcement this week of an antitrust investigation into NVIDIA. Now, of course, with all of these things, it's difficult to tell how much is retaliation in the case of, say, NVIDIA, but I think it's hard not to see it. So some of this was a response to the moves that the Biden administration make, but I think it is also a shot across the bow for the incoming Trump administration that, in contrast to the first Trump presidency, where Beijing was, on the whole, I think, quite passive when it came to responding to U.S. export controls, I think it is going to be more assertive this time. Clearly, there are risks for China being too aggressive on this front, so I don't think they feel like they have great cards to play, but this may be, some of the few cards that they do have as they see, a quite hawkish Trump administration take the stage.
Thank you. Lizzie, what do you see as the most likely impact of China's retaliatory measures against U.S. firms?
To circle back to the example Michael just pointed out, which is China's latest move, the first ever use of extraterritorial laws to restrict exports of gallium and germanium, I think that's a really big deal. So the immediate first-order effect is a supply chain effect. As we know, germanium, gallium are essential for semiconductors, for the defense industry, for clean energy. By cutting off those supplies to the United States, China is basically forcing American companies to scramble for alternatives. And that's not an easy task. So that will lead to higher costs, higher uncertainties, delays, headaches, and business survives uncertainty. Even the adjustment can finally pan out in some way. The adjustment cost is substantial. So that's the first order effect. And I think the second order effect is perhaps more important, is the signal Beijing's move sends, right? basically by applying its law extraterritorially, China is making it clear that we are mirroring your playbook. Our rules do not stop at our borders. For example, if you are a firm in Indonesia and you're using Chinese germanium and Chinese gallium in your product and you are selling it to the United States, then China now can hold that Indonesia firm accountable, even if it's not a Chinese firm. So that's what China is doing here. I mean, enforcement is always a question, as far as we know, China really doesn't really have the surveillance tools and compliance system that United States has developed over many decades. But even without that, this is a game changer. Just the uncertainty, the risk, the danger it creates for business is a threat. And that's a kind of a shock value in and of itself. So that's some of the stuff that we've been looking at. I think Beijing is going to use a combination of those real and potential threats, psychological and monetary fear factors to impose further stress on global firms. I think that's something we need to be on the watch out for.
Yeah. Chiang?
Yeah, just add on to that. I think China has been restrained in its response to U.S. export control and still taking a pragmatic approach. I would first point it out that China actually learned how to do export control from U.S. export control. It didn't have its own export control law before, but now it's been passed and it's in the process of building out the regulations under its export control law. And in fact, last month we just saw the release of the list of dual-use items from China. And some of the actions, like for example, NVIDIA antitrust investigation that Michael talked about, it could be interpreted as building up the bargaining chips when we go into the Trump administration and see what can be bargained away. But you have to have the bargaining chips first. But overall, looking at how China has been using its unreliable anti-lists and its anti-sanctions law and all those potential measures in its toolkit, it has been taking a pragmatic approach, and I think will still be.
Michael, how do you see Beijing navigating the Trump administration, particularly the tariffs that have been threatened against Chinese exports?
Well, I think we're going to see a combination of moves. We'll see somewhat more stimulus to offset some of the impact of Trump's tariffs if those are aggressive, and I should say only some of the impact. I think we'll see a willingness to accept a lower rate of growth because there's a reluctance to do a full amount of stimulus that would fully offset the impact of tariffs. I think we'll see at least some limited currency depreciation to offset the impact of tariffs. But only some, because I think Beijing has a difficult balancing act when it comes to the currency. I think we'll see some retaliation against the U.S. using some of the tools that we saw the first time around and some new tools, as we've just been discussing. And I think we'll see efforts by Beijing on the diplomatic front to keep exports open in third countries, keep borders open to Chinese exports in third countries. So I think it'll be a mix, really, of this full set of tools.
Lizzie, do you see that Beijing has any chips in this game?
So I think Mike already, addressed the question pretty comprehensively, and I think, Beijing is very much adopting a wait-and-see approach to see how far the United States can go, how far its economy can recover, hopefully, by early next year, whether domestic consumption can actually, be picking up some momentum. And it's very much a push and pull game at this point.
And how about with the EU? Where do you see China and the EU's trade relations going this year?
Right. So I think China is going to take a carrot and stick approach here, offering economic incentives on, rewarding good behaviors and applying subtle or not so subtle pressures to exploit internal divisions within the EU. This example just came out. Yes, today actually, we saw Stellantis and CATL signing a deal on 4 billion, new battery plant in Spain. You might ask, well, why Spain? We know both Spain and Italy have been courting Beijing over the years. Well, Spain voted no on tariff. Italy voted yes on tariff. You see that carrot and stick approach playing out there. So I think Beijing is going to exploit those nooks and crannies, those subtle differences, subtle divisions within EU, maximizes leverage. So I think EU is really walking a tightrope here. German car makers are interested in the Chinese market. The French government is more interested in the strategic economy. The Baltic countries, Poland, are more staunchly aligned with the United States. Spain, Italy might be more interested in courting China. So I think EU really has a lot of internal fissures to fix. Without fixing those can actually create openings for Beijing to maximize its leverage on the EU. So that's something that I think we need to be on the watch out for.
Michael, well, how about you? Do you see the U.S. policy toward China potentially bringing Beijing and the EU closer together?
I think yes. I think this is one of those questions that depends on how organized and disciplined the Trump administration is in terms of its approach. If it's an approach that we're imposing tariffs or other punitive measures on EU trade partners and China, that naturally will bring them closer together than a scenario in which the Trump administration is really focused on aligning support behind a sort of something of a united front on China. So I think this is one of those critical questions where we'll just have to wait and see how coherent the strategy is and what the priorities are of that administration.
Thank you. Now, we're about running out of time, and I want to make sure we get to some of the terrific questions that the audience has submitted. Thank you to all of you who've submitted questions. There are a lot. But Lizzie, I want to give you a chance. I don't know how much you've read about the announcements yesterday, and I just want to ask you, do you think that this next round of stimulus that we expect to hear the details about soon do you think it will go far enough?
So, for now, it's still cheap talk, right? And talk is pretty cheap. The thing is, I think Xi Jinping has really depleted his personal credibility when it comes to talking, especially to the business community. I mean, relatedly, the Jack Ma's reappearance. I've received so many questions on this. I have to give an answer here. So, what's Jack Ma's reappearance really about? Is it proof of life, right? Is it, is Beijing just dusting off the ringleader of Chinese entrepreneurs to restore business confidence? Well, I mean, the proof of life part, I think, yes, we see Jack Ma is alive and kicking. We can all sleep well knowing that, knowing that. That's that. But, for the restoring business confidence part, the signaling narrative, I honestly don't know how much I can buy into that. The thing is, Xi Jinping's credibility with the Chinese business and investment community is shot. I mean, years of flip-flopping on key policies, heavy-handed regulatory crackdowns, regulatory whiplash. The business community is completely battered, bruised. Xi Jinping has a crying wolf problem here. And I think Beijing knows by parading Jack Ma around, it's just not nearly enough to fix that. So what's that really about? I don't know if we have time to go too deep into that, but I think it's related to Ant IPO's likely revival, but it's not just about signaling. And I just wanted to give you a quick answer of why I think that's indeed important. It has real economic footing here. First, China has been struggling for years to establish Shanghai as a tech IPO hub. Now it's still aspirational. There's no great tech firm if you look at the listings on Shanghai. If Jack Ma, if Ant Group, other China's most innovative firms actually list in Shanghai, that could potentially jumpstart or kickstart or restart the process to establish Shanghai as a tech IPO hub. So I think that's important. Second, China's capital market has a host of problems. The most primary problem, or the most important problem, is there are no good firms listed. If you look at the listed firms, they're like a graveyard of legacy firms you have never heard of. Some SOEs, you don't know if they're actually earning money or not, and multi-liquor companies. Those are basically the firms that are listed. So China has no shortage of innovative firms. Well, they are listed in New York, right? So that's a huge problem for China. If Jack Ma, or if Ant Group as a magnet can actually attract some of the most innovative tech firms back to China, that could actually be important for China's capital market. By the way, that also has domestic consumption implications. Chinese retail investors struggle for years to find a place to put their money and wealth in. Previously, it was property markets. Property has 10 plus return every year, not its capital market. If a prosperous capital market can be the substitute for property market, then Chinese household can actually see some growth here. So you see the importance of actually reviving its capital market. That's that. And finally, there's a Trump factor. There's the external factor, right? The United States is definitely tightening the screw on Chinese firms who want to list in New York on Wall Street. So the timing is also right. So I think those are the real rationales behind that, that potential move. But again, I'm just guessing here, and I have no idea if those conjectures are actually correct or not. But Jack Ma is alive, unlike some of the rumors you've heard.
Thank you. Thank you very much, Lizzie. Now, we have some time for some audience questions. I want to start with this one. We've talked forever about a transition to a consumption-led economy, but it's not materialized. Why do you think Xi or Chinese policymakers are reluctant to shift to consumption-led growth? Michael, you have a view?
I mean, this is the question that I get with more than any other, no doubt. And it's a little bit complicated, but I think in short version, I think it's a few things. I think it's, there's still a reticence on the part of the leadership because they're not sure that consumption stimulus is going to work. Ironically, because consumption is a smaller part of the economy, it doesn't have the same bang for the yuan that it would in the US. I think there's a political economy issue of not wanting to divert resources from initiatives that Xi Jinping thinks advance China's strategic priorities. So if you put that into industrial policy, it's pretty clear that you are advancing this push on supply chain resilience, tech innovation. If you're providing funding for households to buy another refrigerator, I think that trade-off is not exactly clear. So I think it's those and a few other factors. I think the door is opening gradually to doing more. Clearly, the math, the arithmetic for growth doesn't add up eventually. I think the big question is just, is the door swinging open quickly enough? And I'm still, I'm still not sure that we're really going to see a big shift towards consumption in the next year because I think the inertia is pretty considerable.
Thank you, Michael. So another question. In what ways do you think U.S. trade and industrial policies designed around competition with China may actually be turbocharging productivity and innovation in China? Jihang, do you have a view on this? Is the U.S. policies actually promoting China to?
Sure. I will speak specifically about the semiconductor sector. So before the sanction, and the domestic vendors, they all have a strong preference for foreign chips or foreign components in their systems, just because it's more cost-effective and it's much better performance. But now, with their lack of ability to have free access, they're forced to resort to domestic suppliers, even if this means that cutting into their margin, because domestically produced chips may not be produced on the most profitable production method, but you have to use it. And so we're seeing this trend of turning inward, and I think the leadership is hoping that this demand throughout this supply chain can create the momentum for the firms along the supply chain to innovate out of U.S. export controls. we'll see that play out in the next few years. We're very early in this process, and it's not going to be a linear process because there are multiple different technological paths to either catching up the U.S. or leapfrogging the U.S., and we're just in a very early stage to see that playing out.
Thank you, Chi-Hung. There's another question. As China's population aging issue becomes increasingly severe, is investing in industries related to elderly care and services for the aging population a promising prospect? Anybody care to take that?
Well, this is one of the key project we have planned for our pillar for 2025. So come back next year for our China 2026 report. We'll tell you whether that industry has actually seen success in that. But definitely, there's a lot of momentum. There's a lot of talks and excitement around that. Also, a lot of U.S.-China collaboration in terms of healthcare delivery. Also, pension fund reform, which is huge for Beijing, but we don't really have the time to get to today.
Yeah, in fact, someone asked us if we could each give our best China investment idea for 2025. But I'm sorry, you're going to have to call your broker. Okay, any final thoughts? Michael, what I was thinking was China has announced its target for GDP growth for 2024 as 5%. Do you think they're going to make it? Is it going to be exactly 5%? Or is it going to be a little less or a little more?
There's two questions here. There's where is the economy going to be, and then where is the official statistic going to come out? I think my guess is it'll probably be below 5%. I think 4.8% seems about right, and that is within the range of around 5%. For next year, I think it will be a slower rate of growth, clearly. If the stimulus that has been signaled this week really does come to pass, then it will be only a modest slowdown. If they overpromise this week and kind of underdeliver, then I think it could be considerably slower next year than this year.
Lizzie?
Right. So the answer to that question is actually in 人民日报第5版. So the fifth page of 人民日报, the title of the article is 经济增速怎么看当前中国经济问答? How do we view China's GDP growth? And the article states, well, specific GDP number is not important. Times have changed. Whether it's 5%, a little more or less, does not matter as long as we give it our all. So I'm going to make a bold prediction. The bold prediction is this might be the last year we are seriously debating China's official GDP target. And the 人民日报 article actually cited Xi Jinping critique GDP speed worship, calling for a shift in how we actually need to prioritize quality over quantity for GDP growth. So if China wanted to achieve 5%, it's not a huge challenge for them. Just ask all SOEs to dig up holes and fill up holes for the remaining of the year, then the target's achieved. But clearly that's not Xi Jinping's priority at this point, which I think is not necessarily a good thing. If China is willing to relent on that number, that might actually open up more space to actually implement meaningful reform for the years to come. So not necessarily a bad thing for China, but I think, that fixation on that number is going to relent starting this year or next year.
Thank you. Chi-Hung, do you have a number?
If I have to take a guess, I would put it at 5%, but I would look up more for the quality of growth and not just the numbers. The numbers are easy to achieve. And I would look at if China has a good reign onto the local government debt level and the sources of the GDP growth. Is it just from subsidized demand, or is it from more sustainable sources of growth that can bring more long-term and higher growth trends?
Thank you. Thank you all for joining us today for this conversation. Thank you to the audience for all of your great questions. And now we're going to have a little break.